Good morning, good afternoon, good day. Welcome to my midweek market meeting, 7th July 2021. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my real life trading. They run on TradeStation and Metastock platforms. You will see the latest version of Q Vital, Age and Index that I will use today. They have some additional smart filter. I will demonstrate them, and if you want you may download them from the personalized download page. That was the last slide. Let's continue. As usual, we start with a look at the global markets, starting with Australian index AXJO. 3 weeks ago, the backdrop color turned to magenta and it is remaining magenta now. Price is moving sideways. If you notice, 3 weeks ago or the third week from now, the range was bigger, then it narrowed, and the current week's range is narrower. That is shown in the daily chart also. It's moving very much sideways. Unless it breaks out of the range, we are not sure of the direction and we may avoid taking any directional trade. Australian Monday index is moving sideways. In the last webinar also I showed most of the global markets were moving sideways. Let's see if that is true today also. Topics: Japanese index. Yes, this is also moving sideways. The weekly is inside a triangle. Daily is also inside a triangle. We will not take any directional trade unless we are sure of the direction, which will happen only after it breaks out of the triangle pattern. China market CSI 300 index. Well, this is also moving inside a triangle pattern. 3 out of 3 global markets so far are inside triangle patterns. What about UK market? FTSE index. It's also moving sideways inside a narrow range in the weekly, and we can see that in the daily also. Daily bound by watermark resistance and trendline support, also watermark support. Inside the box, 4 out of 4 sideways range. And lastly, India's Nifty 50. What a surprise. It's also inside a triangle pattern in the daily chart. 4 out of 4 global markets, 5 out of 5, right? 5 out of 5 global markets we study, they are all inside box or triangle pattern, not the time to take directional trades. What about the USA market? Let's continue with Q Global on Metastock for that also. SPY. This is not in a sideways market. It's in a clear uptrend, has trend line support in daily, weekly both. There is no trend line resistance. it's in an uptrend, the optimal buying opportunity would be at the swing low when price went up from the yellow direction line with a bull release signal. Now it is above the upper boundary, overbought for many days shown by the stretch band indicator. This is not a time to initiate new long trades, at least not in SPY. QQQ. A similar pattern also in an uptrend only has trendline resistance. Only has trendline support, not no resistance. Above upper boundary, overbought for many days in an uptrend, but too late to take new swing long trades. Dia. This is moving inside a range. This is the first ETF we are seeing in the USA market where the backdrop color is magenta. In fact, SPY, QQQ are not only in an uptrend, they are making new all-time highs almost every day. Almost every day. Dia is also in an uptrend if you take a step back. However, in recent weeks and months, it is moving sideways. In the daily, we see that from the watermark resistance, also trendline resistance, bounding the price move to the upside. In the last market review, I mentioned that I was thinking that price will move up for Dia and make a new all-time high in line with SPY QQQ, and I also mentioned that that was a feeling, but I was not going to take a long trade at that point. Which point? At the close of this green candle. That was Friday's close. I mentioned I was not going to take a long trade in spite of that feeling. Why? Because it had a trendline resistance. Following that discipline always serves well. Not to take a long trade in front of a trendline resistance, not to take a short trade in front of a trendline support. It was useful. Yesterday, this yellow candle, Dia came down, but it closed with an indecisive shape, indecisive color candle, moving sideways, unlike SPY and QQQ and IWM, Russell 2000. More like Dia than S&P 500 and Nasdaq 100, also moving sideways. The upside is bound by watermark resistance, trendline resistance. Downside bound by trendline support, watermark support. In the last webinar, this was one where I said I was not able to have any even feeling whether price would go up and make a new all-time high. That was because on Friday, IWM was the only USA market ETF, broad market ETF that came down. And that down move continued on Tuesday. Monday was a public holiday. Interestingly, on Tuesday, price came down. Once again, the discipline of not shorting in front of a trendline support would have been useful because price stopped right at the trendline support. The weekly support from trendline is broken, but the week is not over. If the weekly trend line can be broken by the close of the week, that will mean the daily trend line will also be broken. However, there is another trend line support nearby and then another one nearby. In the weekly also there is another trend line support nearby. Therefore, it will not be easy even for IWM to pierce through all of them in one go. As we can see on Tuesday also, yesterday also, price did not find it easy to break through the trendline support. In the USA, QQQ, SPY are in an uptrend, whereas DIA and IWM, they are similar to the global markets. What does it mean? It almost instantly tells us that Nasdaq 100 and SPY, they are kept up by the mega cap stocks. Global markets don't have the benefit of those mega cap stocks. DIA is not influenced so much by the mega cap tech stocks, and certainly not IWM also. So we can conclude almost instantly that the Nasdaq 100 and SPY are kept higher by the mega caps, and that was what we saw in the previous and probably the previous webinar as well. We'll try to find more proof of that from the other Q analysis. What Q analysis? Let's look at Q edge. Yesterday, market was not bullish overall. If we look at the sector advance decline, 91% came down. Industry advance decline, 88%, almost 90% came down. Stock advance decline, 77, almost 80% stocks came down. That is not only bearish, quite bearish. If we see the percentage of stocks from S&P 1500 that are above the midline of their respective Bollinger Bands, that percentage was 48 on Friday. On Tuesday, it came down to 35. That was a sizable drop in one day. That also shows yesterday's market was anything but bullish, it was bearish. Also, the percentage of stocks in the lowest extreme bucket jumped from 0.4 to 6.9. Interestingly, the percentage of stocks in the most extreme high bucket also jumped, though jumped by a smaller percentage, 1.5 to 3.5 percentage, but still it jumped. That means more stocks went below their lower Bollinger Band. At the same time, some stocks could go above their higher Bollinger Band. This is a pattern. When it is more intense, it shows up as Hindenburg. Was there any Hindenburg? We'll look at that, but before that, let's look at the very useful 1 month to 1 day sector industry stock advance decline. I am mentioning for many weeks now that the 1 day, 2 day periods keep on flip-flopping between green to red, and that came true once again. Now the 1 day period and 2 day period are once again red. And another thing I have been mentioning for many webinars now, that while the flip-flop is happening in 1 day and 2 day between green and red, between bullish and bearish, the red color is gradually propagating to higher time frames. Now the 5 day is bearish, 10 day is bearish. 1 month, which was bullish for a very long time, is now bearish overall. The week is not over yet. We'll see how it closes. If it closes like it is today or worse, then it will be more bearish than it has been in a very long time. All the periods from 1 day to month 1 will be bearish in that case. However, as I am seeing, as you are seeing also, 1 day, 2 day period has a tendency to flip-flop between red and green. If that continues, we expect 1 day, 2 day to flip to green now, and that will remove some of the red colors from 5 day, 10 day and 1 month period. We'll see if that happens, or in this case, if the bearishness persists. We'll find that out in real time. As of right now, it is looking anything but bullish. What about technical breadth? The balance between bulls and bears using all the Q signals, all signals almost 80% bearish, strength signals, 68% bearish, continuation, trend continuation signals, 87, almost 90% bearish, even reversal signal 60% bearish. Overall, the weekly technical breadth is clearly bearish. Is there any alert from the number of headwinds? No. We get that alert when the number of headwinds or the percentage of headwinds in the weekly interval comes to about 2%, 3% or more of the stock universe on which Finder is run. In this case, I ran it on 2500 plus stocks. So you would need to go, let's say 40, 50 or higher to get an alert from weekly bearish headwind. We don't have that. Do we have any cautionary signal from the price level? Yes, because more than 50%, 54% of the bullish signals in the weekly interval also came from stocks that are already at price extreme high. That is a technical overbought condition from the entire market as a whole. This is the weekly picture. The week is not over yet. What about yesterday's picture? That is also bearish. Whether it is all signals, strength signals, continuation or reversal, all categories are bearish. And we have a similar alert in the daily interval. Exactly 50% of the bullish signals are now coming from stocks that are already at price extreme high at the border. So it shows that stocks that are giving bullish signals are very strong stocks, similar to mega caps. They are the strong stocks. They were at a very high price level. They are continuing to be at a high price level and giving bullish signals. The other stocks are not so strong in terms of technical breadth. We also saw that weakness from sector industry stock advanced decline breadth, and we saw that from the ETF study of IWM and DIA as well. This shows that the strength is in the strongest stocks. Overall, the market is not strong. And now let's have a look at the market internals. Start with the composites. Nasdaq composite. Change the color. Nasdaq composite and NYSE composite market breadth. Yellow line is the percentage of stocks above 50 MA for the whole of Nasdaq and NYSE. See, the yellow line is gradually coming down for quite a number of days now. Let's see how many days. I think this is the vertical line. So 1, 2, 3, 4, 5, 6, 7, 8. For 8 days, Nasdaq 100 QQQ keeps on going up, making new all-time high. But the yellow line, which is percentage of stocks above 50-day moving average, keeps on coming down. So internally, the market is not strong. And as of yesterday, it also crossed below the average line. The same is true for NYSE also. I think for about the same 1, 2, 3, 4, 7 days or so. The yellow line keeps on coming down. In fact, it is coming down from earlier high also, and it's already below the average line. Though SPY in the candle chart keeps on going up and makes new all-time high. We can see the 3-month new high low is also coming down for quite a number of days, while QQQ SPY is showing divergence. The QQQ SPY ETFs go up, but 3-month new high low is coming down. The red dot is showing that yesterday the drop in the percentage for 3-month new high low was by more than 20% for both Nasdaq here. The drop was by more than 20%, and for NYSE also the drop was by more than 20%. Not a bullish market at all from all these angles. And if I change the interval to weekly, this also I showed several times earlier, cannot be hidden by the market players who are keeping the market high by using the mega cap stocks. Advanced decline, up down volume for both Nasdaq and NYSE are showing very clear bearish divergence, and that is not a time to keep on buying stocks. Eventually the advanced decline breadth weakness, the sector industry stock advanced decline breadth weakness, and also the technical breadth weakness, they will prove to be right. The mega caps alone cannot keep the market high forever. And even if they did, it would not be profitable to trade any stock other than mega caps. And trading mega caps now from the long side may be too risky right now. There may be some exceptions, but overall, this breadth weakness across multiple dimensions is showing it is not safe to keep on buying stocks, probably except in industries that were weak earlier, like healthcare. And I have been telling that I was accumulating some healthcare stocks. Interestingly, the market was weak, but my healthcare stocks, which are fundamentally all very strong, I chose them like that. They held up quite well. And let's look at some of them. Vivo, while the chart is coming up, let's look at its fundamentals using Vital. More than 3 star. I call a stock fundamentally 3 star. That's the standard Q terminology when it is both undervalued as well as having earnings growth in the last quarter. 1 plus 1 is so powerful, it's not 2, so it's not 2 star but 3 star. And in this case, it is also having high revenue growth in the last quarter, so it is more than 3 star. That is Vivo. And let's look at its chart. The weekly is continuing to go up, daily is continuing to go up, has excellent support from memory trend line support. In the alternate chart, daily chart also, we had a kahuna couple of days ago, long bullish candle. This candle had a kahuna, and after that price is moving almost sideways. Yesterday it touched the trend line support almost and went back up. The weekly is also bullish. This is not showing any weakness. I bought it when it was at a very low price level. It's great fundamentals, and industry was weak earlier. I bet on a possible industry rotation, and that is working out quite well. Yesterday the stock went up while many other stocks went down. Next one, QDEL. Let's look at least QDEL's fundamentals also. Another better than 3 star fundamental stock, undervalued, great earnings growth, high revenue growth also. And if we look at the chart, QDEL, gradually going up after creating the double bottom in weekly and daily, broke out of the watermark resistance at this point. That candle had a kahuna. After that it pulled back little bit. Still it has higher low and higher high. If it can give a cyan color candle now, that will be the first possible go with flow trend following long trade setup after this prolonged down move and after this sideways move. So this will be the first go with flow long trade setup. I was already in the stock looking at the fundamental strength and the technical reversal from the double bottom. This stock also went up yesterday, though the market was weak. Another stock, Hologic, HOLX, interestingly displayed the bullish headwind in the weekly right at the very bottom. 1 week ago broke above the trend line resistance. This week's candle is looking bullish. Yesterday's candle very bullish. There was a series of kahuna at this point. Bongo turned green here, and then price is continuing to go up. In fact, yesterday there is a viable gap up also shown by this band indicator. I am already in this stock as well. I am holding on to the position. Great fundamentals. I am not going to the fundamental again. And another one, all in healthcare, FLGT. I mentioned all these stocks earlier. I don't have a habit of showing stocks after they go up unless I shared them when I took those trades, or when I at least posted the trades on my website or on the Twitter page. FLGT is now bullish in weekly, bullish in daily, higher low, higher high, has a kahuna couple of days ago. After that pullback, went up again yesterday. Actually, yesterday went up by 3.85%, large percentage up move. Bullish, I'm continuing to hold a position. The healthcare stocks that I bought, I publicly shared earlier, they are doing quite well relative to the overall market. One stock, EVRG. This is an utility stock. I discussed it in the last webinar while explaining the indecision signal and how to use a cluster of indecisions together. While showing that, I showed that this stock, EVRG, utility stock, has a nice dividend yield, 3.47%, was medium valuation but with earnings growth and revenue growth. And it had a cluster of indecision signals. My last webinar was right on this day, and I mentioned it would be possible to buy this using the cluster of indecision at the low, series of long lower tail candles, great fundamentals, and the utilities sector was weak for a long time, and then it was starting to go up. That was also useful. Yesterday, it created a very bullish shape candle. Tried to go down but closed sharply higher. One could probably take a trade yesterday using the intraday fine-tune chart. Therefore, not only the healthcare stocks that I shared earlier, the utility stock that I shared in the last webinar is also doing all right, though the market was weak yesterday or even on Friday. But I didn't share only long trades. I shared some shorting ideas. One was PBR. And let's have a look at the original post. It's always useful to go back, relook at the original post to see how it looked like when I first shared the idea. This was my post. Here is a stock. I would buy, another I would not, based on Q technicals. That was 12 days ago. The one that I would not buy, I mentioned, that was PBR. Let's look at the PBR chart that I shared. This was the PBR chart. It went up strongly. In the daily, in fact, it broke out also of the watermark resistance, and I'm sure breakout traders were loving the breakout, but I saw the watermark resistance in weekly, the indecision at the top in weekly, indecision at the top in daily, few more here, and then very importantly the bearish headwind in daily. And I mentioned that I wouldn't buy it, but I was not going to short unless it broke below the trendline resistance. Later on I did take a short trade based on my analysis that I told I wouldn't buy it, and I actually took a short trade. Let's see how PBR worked out. It in fact created a bearish headwind in the weekly also. This was the daily bearish headwind that I shared in the post. Created a reversal candle, bearish reversal candle here at pendulum or price extreme high. Those are always points to be cautious about long trades and points that we may look to short. That along with the headwind signal, I took a short trade. I used naked put options. As I mentioned always, I avoid taking naked long options unless it is for shorting a stock at the top, which was the case here. I took a long put option expiring I think in August. I mentioned it in the forum post that I followed up later. Let's look at that. So you will see how many days I kept in the option when I bought it. Here I used put option expiring on 6th August and 11.5 put. My initial analysis was here using the bearish headwind, and you can see that time price was around 12. So I might have shorted somewhere in this area. So I took slightly out of the money put options, naked put options expiring on 6th August. I kept it quite a number of days. And as of yesterday, I have 70% profit. If it comes to the yellow direction line, I think I'll have 100% profit. If I have 100% profit in naked options, I have the tendency to book half position profit, thereby get my money back and try to let profit run on the remaining position with what you may say is house money, though it's also my money. I earned that profit. Now this tactics of closing half position, at least half position at 100% profit with put options. Another stock I shared earlier, I used that tactics and I told I would follow up on that trade. That was CCJ. I shorted here right on this candle and I publicly shared that at that time. Very next day it dropped. I had 100% profit with naked put options, and I mentioned in subsequent webinars I booked partial profit, and I explained why, though at that time I closed most of my bearish trades, I did not entirely close CCJ. And so far it is working out all right. As of yesterday, that position, the remaining position I have in CCJ using put options, it has about 150% profit. If this trend line breaks, I will easily have 200% profit. I still have some more days to expiry. I think this one expires in July. I have already gotten my money back, so I am not in a hurry to exit the remaining position in CCJ. I will continue to hold the put options. If I see this trend line resistance is broken and price is going up, then I may manage the trade. I will decide at that point whether to book the remaining position profit or do something else. Do something else meaning whether I will sell an out of the money put options to make it a vertical. Probably not, if not so many days are left in the option to expiry. Then I will not try to convert it to vertical. I will simply book profit probably if this trend line resistance is broken to the upside. Again, my decision of shorting, booking partial profit and not booking full profit is working out quite well. What about gold? Let's look at gold. In fact, let's look at the post that I shared on gold analysis. And again, probably no one I know was bullish on gold at that time. Now, slowly they may be changing their mind, and you will notice I have a pretty good track record. If you are following my posts on Twitter and website, very good, I think. If you allow me to say that, I think I have a very good track record of finding both the top as well as the bottom. Of course, I do trade in between also with go with flow setup. Many people are used to take trend following trades. That is not something surprising. I do that also. And I have a great track record, I think, of catching the top and bottom, identifying buying opportunities at the low, shorting opportunities at the top, like shorting PBR at the top, like buying all the healthcare stocks at the bottom. And same was true for Newmont. When did I share it? 8 days ago. June 29th, publicly, before knowing the result, as usual. The gold mining industry was score 1 over 10 days at that time, and then in real time I saw it improved score to 120. We have total 147 industry groups in QH. It was accelerating, so gold mining was looking good to buy a stock. I looked at Newmont, medium valuation, great earnings growth, some revenue growth as well. Fundamentally, it was looking good enough to buy. Also had a dividend yield of 3.5%, and the seasonality was not there. Let's look at the chart. I used the trend line support. I mentioned trend line supports, these memory trend lines work beautifully, and you know that if you are using the Q systems. It was at weekly support and daily support. This was not Newmont, this was gold. Gold itself was at support, and Newmont, I explained, not only had support, the weekly and daily candles were even more bullish than gold itself. So I decided to take a long trade in Newmont at that time and see how GLD has done. From the trend line support in weekly that I showed at that time, it has nicely gone up, quite nicely. So you could make a good profit using GLD also, but I tend to trade stocks more than ETFs. And if we look at Newmont now, it has also gone up very nicely from the weekly and daily trend line support both. And as I mentioned at that time, before knowing the result, as always, that I took a position using synthetic long, short put long call. And as you can see from the price move, that is working well, though the market is not doing so well. And interestingly, my gold analysis, Newmont analysis worked well, though overall market was very bearish. So my short trades worked quite well, PBR, CCJ, long trades in healthcare stocks, Newmont mining, EVRG, the utility stock, also worked well. And I did take some other long stocks, but I quickly exited them even before the stop loss was hit, looking yesterday's weakness. But that weakness was intraday. I didn't want to hold on to all my positions. I had more number of positions than I wanted to have, at any time. So I reduced exposure, and that was based on my analysis of the market ETFs charts yesterday, intraday, not very long after the market opened. I saw IWM. Weekly was breaking below trendline support, and daily it seemed like it may close below trendline support as of that time. Of course, by the close it recovered. We saw that it closed well above the or somewhat above the trendline support. We saw that. But at that time, using intraday analysis, it was coming down quite fast. I looked at QQQ, it was displaying the bearish headwind in daily at that time. Looked at SPY, it had a bearish headwind in the weekly at that time. Daily had a bear release signal. And Dia was also displaying a bearish headwind at that time, and it was reversing from the trendline resistance with a bear release, bearish traffic line. So looking at all that, I wanted to reduce the number of long positions I had. I already had the healthcare stocks, they were doing well. I had no reason to exit them fully. I might have booked partial profit just to be on the safe side. I also had the Newmont mining that was doing all right. There were some other long positions that I had, they were not doing all right. And they might not have hit the stop, but just to reduce the number of open positions, I exited them. I tend to keep my number of open positions to about 8 to 10. Sometimes it goes a little bit above that. So one stock I exited was CS, Credit Suisse, a banking stock that I shared earlier. I don't remember where I shared it. Might have shared it during this breakout from daily, weekly both. It could not go up much after that. Gave a bearish flow candle on Friday, and yesterday it was coming down sharply. And I knew the trend line support was there in both daily, weekly. So I could also wait to see if the trend line support in daily, weekly are broken before exiting. But in this case, I exited CS with a small loss just to reduce my number of open positions, and few other stocks also I closed. I still have a number of positions. The market is looking weak, though the mega caps are strong. Let's have a look at the mega caps. Let's look at FFTY. And I think I posted it on Twitter also. Yes. You see the daily chart. It keeps on touching the trend line support resistance and reverse from there, and the same in weekly. You saw I used the trend lines beautifully in Newmont mining trade. I used it earlier. Newmont mining was a long trade. I used it earlier for Dia short trade. Looking at FFTY, again it's an ETF. I don't trade ETF so much. Every time it came to trend line resistance, you could short. Every time it came to trend line support, you could buy. And so long as the distance between support and resistance is wide enough, you can keep on taking this bounce, Q bounce setup. The more it comes to the peak of the triangle pattern, the distance becomes narrower, and then the reward risk may not be acceptable for taking a swing trade. So far it has worked quite well. Interestingly, yesterday also it hit the trend line support and then precisely reversed from there. Therefore, any short you had taken earlier at this trend line resistance using the reversal from trend line with an indecision at the top and then a bear release signal, you would exit that position at the trend line support. You would not hold on to that. That was FFTY. Let's now look at the mega caps to see They are doing well overall. They are holding the market up, but is there any buy setup? Probably in none, except maybe Amazon, but we'll go through them. Tesla broke above the weekly trendline resistance, however, with an upper tail. Next week, created an upper tail again. This week, bearish shape, solid candle. After it broke out of the sideways range, it had a gap up, but indecisive shape candle, moved sideways for 1, 2, 3, 4, 5, 6, 7 days with a cluster of indecision at the top, a bear release signal. That was an alert. So if you had taken a breakout trade at this point, this cluster of indecision at the top and also a bearish release in the middle would be an alert for you to book profit without waiting, at least partial profit, and that would be useful because this one came down yesterday. Now if it can go up, gives a bullish flow candle, that will give a go with flow trend following long trade setup because the weekly is already bullish in color. We may see if the go with flow long setup comes. If not, once it comes to the trend line support, especially using intraday chart, it is possible to take a bounce long trade, and it may be alright to take it using stock, or you could also use short call vertical. Short call vertical at trend line support works. Sorry, short put vertical. It should be short put vertical at trend line support work very well. Short call vertical at trend line resistance works very well. Tesla, one of the mega caps, not so strong looking, isn't it? Nowhere near new all-time high. In fact, in the weekly, it has a triangle pattern. The top of the triangle is gradually coming down. We'll see if this trend line can be broken or if it holds. Right now, there is no trade. Netflix just broke above the weekly and daily trendline resistance yesterday, far from the previous all-time high. Not at all as strong as SPY and QQQ. Now we saw in Tesla, it broke above the weekly resistance but could not go far. We'll have to see if Netflix that broke the trendline resistance yesterday, will it go far or will it also come down? We'll have to see. Right now, breakout traders might take a trade, but I don't know where to put the stop in this case. I will not take a breakout trade in such a situation, but it did break out. However, if you see where is the volume for breakout, there is no volume. All this volume bar is so small you can hardly see that, and of course there is no pressure. So that now we know that this is not a breakout to be traded. Even if it shows a trendline breakout, the volume is almost non-existent. So that is not a long breakout to be taken. Facebook. Facebook was one of the strongest. It did make new all-time high, but it is displaying a bearish headwind in the weekly. Daily is at upper boundary, but the bearish headwind itself is a reason not to take any long trade. Of course, it has trend line support. We are not going to short it, but the bearish headwind is telling don't take a long trade when it is already so high in the price level shown by the pendulum band indicator. Microsoft, new all-time high, indecision at the top in weekly, daily both, far above upper boundary. The jump indicator is very close to being at the extreme level. If it becomes cyan, it will be extreme. Green means it's getting there. Too high in the price level, too far above the even weekly swing low and certainly daily swing low. too far above that to take a long trade now. Apple, this one has done very well. And now remember, when it was around here, I shared it publicly. I took a short trade and I also mentioned I closed that trade at this point. I think by looking at the trend line support, I think the trend line support was there. If I remember correctly, you may watch the video around this time. It's in the YouTube channel. Perfect timing, isn't it? Since then, it sharply went up. Forget about having any profit. I think I used verticals. I would have a large loss if I held on to the trend. Approaching the previous all-time high. Very bullish, but far above the swing low. If you took a bounce long trade using the trend line support, you would have a very large profit. I didn't take that trade. I just exited my short position. Also very strong. And these are the few mega caps that are holding the market high up. Facebook, Microsoft, Google, to some extent Apple, and later on we'll see Amazon, of course. Google, very high in the price level. One could consider taking a long trade probably on this day at the swing low. Now it is near the upper boundary, bullish, but at the upper boundary, not a time to take a long trade. And Amazon. Amazon had a very nice breakout yesterday. It had a bearish headwind at this point that was associated with earnings shown by the dollar symbol. That bearish headwind created a watermark. Price created, you may say, a cup, then a handle. And yesterday it broke out of the watermark resistance here that was created by bearish headwind, broke out of the watermark created by the cup's handle, and it did break out with very high bullish pressure, very high volume, increasing volume for 2 days in a row. We had bullish flow one day earlier. So now if you look at the weekly daily, in fact on Friday you had a go with flow long trade setup. I'm of course seeing that it was near upper boundary. If you omit that for now, it had a bullish flow in daily, higher low, it had a higher high, very long up move here. Weekly was already bullish, so we could take a long trade right at this point using go with flow setup, and yesterday it gave a cup and handle breakout also, and this is looking very strong. Had a kahuna, of course such a long bar would have a kahuna. Not only that, it had 2 days in a row biggest up move in 3 months. That would also be a reason to try the long trade on Friday itself, because Friday itself gave a biggest up move of 3 months. Then yesterday it gave another bigger move. This is looking strong. This may be the only mega cap that could be tradable over the last 2 days using either go with flow setup, or yesterday using a, in fact yesterday had a gap up move also, so you could use the gap long day trade also, or a cup and handle breakout. If we look at the intraday chart, let's move to 5 minute that I use for the morning session. Price opened here, that was above previous day's high, that was a gap up open, then early range low, early range high form. The gap long setup tells that we could take a long trade right at this point. Put stop below early range low, that was never approached. As a day trade, it could be closed. If price had covered the risk distance, you could close then, or you could close it at the close of the day. If this gap long day trade was taken using stocks, you could close the stock position at the end of the day, book the entire profit from the stock position, use part of the money to buy a call option or maybe call vertical to continue to be on the long side, but using part of the profit. So that way your risk could be zero. That is a tactics that Q traders and I often use to continue to participate in the market move, stock move, but get my money back by booking the profit on the stock position and using options with part of the profit. Mega caps, this few, only few: Amazon, Microsoft, Google, Facebook, to a lesser extent Apple. Why I say to a lesser extent Apple is because it is still not above the previous all-time high. Though in recent few weeks the move is very sharp. So all of them, if you consider from this time, all of them are holding the market up. Overall, the market is not strong. Shall we try to find some buy setups? If we look for buy setups, it may be safer to look for them in, let's see, which industries were strong yesterday. Not many, isn't it? Let's find out. I'm going to the industry percentage move table. 18 industries, you can see from here. 18 industries were up yesterday, 129 down. What are these 118 industries that were up? Let's look at the top 10 and you will find immediately how the market is. This from another angle. What sector are they in? The best 10 industries. Real estate, real estate, real estate, real estate, real estate. 5 of them are in real estate. 1 in utilities. 1 in communication services. 1 in healthcare. All of them are defensive sectors. Only one of the best performing industries yesterday was in non-defensive infotech. That was system software. If that is the case, it may be safer to look for buy setups from the defensive areas. So let me select the 10, but let's choose the 10, but not the system software. So I'm choosing only the defensive industries that were up yesterday, and let's look at their underlying stocks from S&P 1500. These are the stocks, and I mentioned that if you wanted, you could download the latest version of Edge Vital Index, the changes in the smart filters. I have rearranged the filters a bit, so the quarterly earnings growth filters are here. That was at the same position before. Yearly earnings growth filters are after that. That was also at the same position. The quarterly revenue growth filters, I moved from the right end to this location so that the growth filters are together. There is a filter that one gentleman sometimes use, and I thought it was useful. That is more useful for IPOs that may not have earnings, may not have much revenue growth, but you may see if the revenue, not growth, but revenue in the last quarter has positive revenue or not. And he uses the number 25 million. So I use that. If you click this smart filter, it will give you stocks with last quarter revenue of at least 25 million. Now, most of the regular stocks will have much more revenue than that in the USA market. It's more useful for IPOs to see if they are making some money, some revenue, or are they just paper companies. And then the filters here were there before also: short squeeze, earnings nearby, and then sorting by pressure and sorting by percentage change. Somewhat rearranging the filters here, adding one filter on last quarter revenue number, and then here is another change. And this is the reason you may consider downloading the latest version. We already had 3 star. already had 1 star, and now I have the crown jewels. They include the conditions of 3 star plus they look for revenue growth, positive or negative. So when I have a list of stocks like this, what I used to do earlier, look for 3 stars first. If I don't find tradable candidate in terms of technicals, I may then go to 1 star. And now I'm starting with crown jewel first. That is giving me stocks that are undervalued with earnings growth as well as revenue growth in the last quarter. I have, let's say, these 2 stocks that went up by some reasonable percentage. Let's open them. TMO, Thermo Fisher, crossed the trendline resistance, but it is already far above the recent swing low. Not going to buy now. WAT, Waters Corporation, in an uptrend yesterday had a gap up open, held on to the price gain of the gap up, but already too high in the price level. Not a Q trade here. Bullish certainly, considering the market weakness. So no trade there. So see now what I'm going to do. I started with crown jewel. These 2 stocks I have already looked at. They were highlighted automatically when I clicked the chart icon to look at their charts. I press the delete key now on my keyboard to remove those stocks, and now I'm going to click 3 star. So that will relinquish the filter from the revenue growth, high revenue growth. Now I have the usual 3 star with earnings growth and undervaluation. And let's look at the stocks that went up by about 1% or more. QV certainly bullish, but too high up in the price level. ILPT. This is looking better because it has robust trend line support. So I'll come back to that. QHI went up yesterday but near trendline resistance. Multiple of them, not going to risk my money now. Unit Corp moving sideways, has trendline resistance, not going to buy now. MTD certainly bullish, went up yesterday, far above the recent swing low, not going to buy now. So we are left with ILPT. Let's look at it using the 3 chart template. Q weekly, Q daily, and alternate chart daily. Weekly is yellow, bullish shape. Daily has very nice trend line support. Bullish shape candle, bullish flow. In fact, a reversal candle also. That's a strong bullish signal. In the alternate signal, we had 2 days in a row, biggest up move of a week, inside a squeeze, and a MOBO breakout. Let's look at ILPT's fundamentals with Q Vital. That we can see the scorecard here. Q Vital will make it clearer because now we have the graphs as well. The graphs on the right hand side, these are on EPS and revenue absolute number for the last 8 quarters. This is the latest quarter Q0 and then Q -1 to Q7, previous 7 quarters earnings, not growth, earnings, and the line here shows earnings growth. So here I see earnings is steady going up, earnings growth year over year quarterly earnings growth very nicely going up. Revenue is steady, though the revenue growth itself is coming down. That's fine. I selected it as a 3-star candidate, so I was not going to expect revenue because I relinquished the filter from crown jewel. I removed the condition for revenue growth, so I had only 3-star candidate. Fundamentals looking great, has a dividend yield of 5%. The chart has excellent support some momentum in the alternate signal in a squeeze, reversal candle as well, bullish flow. And if we wanted to look at its industry one more time, we know it is in a strong industry, one of the top 10 industries yesterday. Let's look at the graph. Very strong industry indeed. 145 score out of 147 yesterday. Industrial rates went up, holding steady. Yesterday in a weak market went up by 1.1%, and if we look at the rotation, it's looking very strong. Earlier very weak, showing acceleration as well. So in this market it is not easy to find low risk buying opportunities. This seems to be one because it has great fundamentals, robust support on technicals, and has a nice dividend yield of 5% as well. Like this, in whatever market we are in, we are always able to find low risk buying opportunities that has reward commensurate to the risk. We are at the 1 hour point. Let me end today's session here. I thank you for attending. I look forward to seeing you in my next session that will be during the weekend. Thank you once again. Keep safe, and no reason not to do so, as these live sessions, my Twitter posts and forum posts show. No reason not to do so. Trade profitably. Thank you.